Okay, guys, I've got examples here now rolling into the following week. So you'll see here I'm recording this on Monday the 28th. Just a beautiful setup here in the NQ from today. So through the prior videos here, I was trying to do it all in the last week here, but I can't keep up with them all. So this is such a good one here. I figured I would just make a point of showing you this. So here, let's just review it as we would. So this is the June NQ, same setup here. I've got my toolbar. I have the initial balance indicator. So here's my playback. It's now 10:16 a.m. Monday morning. Now, a couple of things to note here right off the bat. So you can see now that if we look up here in the corner, the trend is up because we've just broken. We've had multiple breaks of structure. When we started the day here, the trend was down. This was the last break of structure. But now we've had multiple breaks here. There's one here, and then there's a couple little ones in there. We'll look at that in a second. Now, one thing I wanted you to just notice here, because this is striking, it is actually not uncommon. If I open this up here, so here's the overnight here, and session officially starts this. I have this on the NQ extended trading hours. Well, look at the pre-market, right? So here's the pre-market low and high. Look what we do right here. We're tagging the pre-market mid. So of course, right, not to digress this, but you should recognize what just happened there. All right, so there's a perfect 50% retracement. Here's first actually gets the second algo target here. Again, not to digress, but my point of showing you that is that while we're focused in on the swing structure, supply and demand zones where there's opportunities, I want to re-emphasize the idea here is to augment what you're already doing, right? So we don't want to just throw out everything we know about trading and now we're just focusing on swing structure and supply and demand zones. Of course not, right? So it fits in nicely with whatever your approach. But just a beautiful one. So we start the day. Here we tag the 50. There's a little retrace. Here's the open. And so it's just a lunar shot straight up. And again, this is actually much like last week. It's just the volatility we're seeing here is absolutely just remarkable. This is some of the most extreme volatility I've ever seen. I've been doing this for 30 years. So here as we come into this now, let's pay attention to the swing structure. So the first thing that happens here is kind of my point I was trying to make there. Now we're coming in Monday morning. There's no reports have been released. We've had nothing other than more tension perhaps over this past weekend. There's no reason for the market to rally, no reason for it to go down. But what does it do? We open and we take a lunar shot straight up, right? Just straight up. So before we even get a pause, 565 ticks, right? 41 and a half points, 2,700 contract, right out of the chute. Now most traders don't trade within the first couple of minutes. I said some, right? So what is that, right? That's just nothing but machines. That's the machines, right? Driving it up for whatever reason. Could be there's just its algorithms responding off of this 50. My point is, this is absolutely pure as it can be, market manipulation. There's no reason for the market to go up other than the market's natural tendency is always to go up, right? There has to be a reason for it to go down. It will, if it's just left to the tides, it will trend higher. But in this case, there's nothing to spark that, right? Other than an opportunity. So if you look at that, so one thing we know with absolute certainty, institutions, whales, call them what you will, banks, are never going to buy the highs, right? So first thing that happens is this would likely surprise traders, right, in terms of how far it goes, right, and how extreme that is. Now this is a 5-minute chart here, but still that's a monster rip to go straight up that far. So we go up to that. We know that if the intention here, if those that can move the market intend to take it higher, well, barring the news event or something that would drive it, they're not going to continue buying up here, right? So what's more likely is at the very least they're going to take it down 50%. At the very least, right? Think of it in the context of what we've been describing. At the very least, they're going to get into the discount zone. So with that said, right, these are just things depending on how much time you have in the markets, you'll recognize, right? There's no reason for that. So what is it? It's manipulation, right? So they take it up, right? So this is just pure profit for them. How many retail traders are taking the other side of the market in the first 5 minutes? Not many, right? So they can do it here. So they do. Now, once they get it up here, right, unless there's going to be sustained news or events or a reason for it to continue. Okay, we made some money here. Well, now let's take it down, because what have you done now? You've sucked in all the week longs. All of retail's thinking, oh wow, we got a big day going on. Likely not, right? So now it comes down, because if they want to take it higher, they'll take it down first, right? I mean, if you could, wouldn't you do the same? If you could drive it up and surprise everybody and have no resistance. Look at this bar, right? There's absolutely no resistance there, just straight up. Now, once you get down here, so if you want to take it higher and break that high, what's the first thing you're going to do is take it down, right? So you can do it. So you can buy it lower, take it higher. That's what they do every day. Okay, so enough of that. Okay, so let's look here now where we are in the swing structure. So if I turn the supply and demand zones on, well, I got a bit of a mess, right? So again, here I'm on a 5-minute, but I've got up and down zones here, and I've got massive range. Again, this volatility is just extreme. So right off the bat, you'd look at that and go, well, okay, that's not helping me here. I can't work within that. Oh, now maybe you could on micros, but still, right? Is there enough? Right? We can see. Well, I know the trend is up, but is that enough here? Do I want to be looking to be a buyer? Probably not. So I'm going to go from the 5-minute to the 1-minute. Let's go down to the 1. Well, now we get a closer look at this again, straight out of the chute. Just no resistance, just straight up. There's nobody there to take the other side. So up we go. So we leave this monster range here. So this is, in the NQ, you know that's going to be significant. That's only 44 point range, about $900 range. So probably more. But so this one is too big. So if I'm looking at that, I might do this. I might grab that and say, okay, well, if we're going to come up to that wick, right, because something changed here. It's 10 o'clock hour. All of a sudden, we're coming down. Now, what's the first thing that happens? Break of structure. Now I get, pardon me. First thing that happens is change of character. Then I get break of structure. Now I'm starting to retrace a little bit here. Now you can see, that I'm getting little micro breaks, right? So we don't want to ignore these breaks just because they don't go far enough to register a change of character or a break of structure. We can identify, oh, okay, well we've broken this little pivot here. So now as we come back down, now we're going up again. Now here I get a new high. Note, internal high. But so this is my high of the internal range, right? Because on the internal range we use the tick high, tick low. We're not worried about anything other than the absolute high. So wick is just fine. So I've got a new range here. Now look here. Now my trend is down because of the breaks of structure. Okay, so now I have a downtrend. I'm headed towards VWAP. Oh, let's play this a little bit further. See what we get here. Okay, let me pause that. I'm going to turn the zones on, as I would here. So I'd recognize here, okay, this one is too big. I don't want to fuss around with that. But I'd be paying attention to this one. Right, so here, because this is more manageable in its size, right? So I can, where's my pivot there, right? There. Okay, so I can, and you can, it's marked here, but if I've got two of them on top of each other, I may just do it that way. I'm going to say, okay, that one's too big for me to trade, but I'm going to pay attention to this one. So right now, so if you just eyeball, what does your eye see? Right, we've got this, right? So we're coming down, break of structure. We have change of character, break of structure. Now I don't have enough yet for a second break of structure. So I've got the internal trend is down. And I'm looking at this going, okay, well, now let's turn these back on. So I know what's going on down here. I'm looking, so I'd have nothing until I came all the way back down. So, and I know, knowing that this is down at the IB low here, I'm going to turn these off here. Now let's, what am I at, 100? Now let's play that and see how far we get. If I need to fast forward, I will. I think we get a decent example here. So we're still going down. Okay, now all of a sudden something changes. So note what happens, right? We come down, we buzz VWAP. Note again, as I want you to be mindful of, just because it's not marked, let's not turn our eye, let's not close our eyes, right? So these are little breaks, right? Little breaks. So I can see, okay, is it a change of character? No, because I'm going lower low, lower high, lower low, lower high, lower low. All of a sudden, change of character. Right, so if I turn these on, did I leave anything behind? Well, now I've left one here because this is the last down bar, the last low. So a potential demand zone here. This is the last low. This is an up bar, right? So I'm not including that. This is the down bar that this is the last low that gave me the break of that high. So this is the zone that I'm paying attention to. Now look where we are if we're coming back up the other direction. We're coming back to the 50% of this range. Now, look at the difference because it's important you see this. Oh, what's the easiest way to do that? Here, let me do it this way. So if I take it from swing high to swing low, right? Here's the 50%. This is where I get into the premium zone. Right, so now again, I'm just making the distinction between the larger swing structure and the internal high. Here's the, well, it's right on the chart for you, right? So here's the weak low. So if you're looking at this chart through the lens of this approach to technical analysis, here's the weak low, right? Because this is the low that has yet to do its job. For it to do its job, it's going to have to take out that high. So as we're retracing up here, we're getting into the premium zone. Again, let's just stay consistent. So here, once I break the 50, now I'm in the premium zone. So right, I'm going to have a change of character, or am I just going to come down and target this low? Unknown, right? Is there a trade opportunity here? Well, I'd be mindful of the fact that I've had a change of character that left behind a demand zone. So perhaps if I were to come back into this, I'd have a heads up here looking for opportunity. Let's play this forward just a little bit further here. I'm at 100x here, so I think okay, so what did we just do? Well, first look at the shape that it takes, right? So we get a swing here, so I get a low, I get a lower high. Now we're breaking here. Again, note it's not enough per the discussion we went through about the average true range for swing structure, but I can see it. So swing up, leaves the demand zone. I come down here, I get a little break, I get into the pocket. What do? I tap the discount. Now that's you don't have a measured move algo there, but if you were looking for this as a push and then a retrace, right to the well, of course I do the 618 and the 65, 764, 786. Right, that's the premium zone here. So we come down here, we get right into the pocket there, just a little. We're tapping the 50% of that zone as we tap the 764, 786, a couple of ticks in front of VWAP. Where's the trend? Down. So this may not be palatable to the trend trader or the swing structure trader who's looking. So the expectation, that's the weak low. Hey, why wouldn't I be targeting that? Well, of course we don't just because it's the weak low doesn't mean that will break. It just means that that's the target for shorts here, for bears. Swing, retrace, swing, retrace, right? So right here, that's change of character. So as we start to push out, okay, maybe you didn't get that one. Maybe that you were influenced here and you didn't like it, the setup for whatever reason. Let's take that one off. Okay, let's stay consistent, but recognize that that's a decision you're going to have to make regularly. You may not get the perfect change of character with a flip and back to. You may not get it perfectly here, but that's something to pay attention to. And if you were more conservative here about risk reward, and you said, okay, well, I'll only take them if I can get them at the 50. Oh, here I got to do it this way. If I can get it in the discount zone. Well, here you're literally, oh, God darn it, I forget that I got to start it where I want to stop. There we go. Okay, so if I wanted to take it right here at the discount, and I'm going to target at the minimum that high, but why wouldn't I target the next supply zone? Well, now we're pushing. If I want to go to the discount range here, there's 9-to-1 right there off of this retrace, right? So I'm risking 195 to try and make 1765. Let's just play it. See what we do here. Pretty good. There's 7.5-to-1. Right, we just come out. Now note here, we just put a tick. This is literally to the tick, the edge of the larger supply zone. Play it again. It's a little bit forward. There it is. Right. So you got right into the pocket there. So you got let's call it just a couple of ticks shy of 9-to-1. Not a bad start to your day. Now let's pay attention to where we are. I'm pulling this over. Now 10:58 Monday morning. So it's not right. If you'll recall from the very first video when we were looking at line drawings here. So all of a sudden we get a change of character. Now all of a sudden this is starting to look pretty familiar. Remember we talked about this. This is going to be a hard trade to take. Now look over here. Where's the trend? We know the trend is down, but boy, that looks like it's screaming higher. I didn't say it was going to be easy, but if you're just doing the math on risk reward, would this not be an area of interest? Look where we are. We're past the 618 now, so we're in the premium zone. Oh man, slow this down a little bit to 50. Let's let that play a little bit further. Now, what did we just do? Now, I want you to see this here because this is pretty precise. Right? We just ticked the 50% of this zone here, demand zone, and we went right to the 50% of the supply zone. I know, you might say to yourself, oh, probably just a coincidence. Maybe. Maybe. Let's let it play. Let's see here, and then we'll wrap this up here as we get towards the entry. Okay. Now I'm going to pause it there. That's because that's about to be removed here. So I'm going to take that. So I stopped it right as it's about to take it off. So because that would have been way too big. So look what we do here. So we come back to this. Now we get up here. So look, it's the change of character here. And then we snap all the way back. All right, so up we go. We tag the midline. One wick goes through it just to grab the liquidity straight down. So as it sits, let's put it back together if I can do it this way here. So I start at the stop. Here's the entry. What's the target? Well, here's the week low. All right, so that would be a reasonable target. Now what am I looking at? There's 10.5 to 1 to get to the week low. Right here, I'm already at 7.5 to 1. Already. Oh, well, we'll leave these on here. Let's go ahead and let it play. I'm at 50x. Go see. Okay, so what do we look what we just did? What did we just tag? So it's a tick in front of VWAP. Now we're in the demand zone. Retrace. You start to see, right? If I could do one, I could do 3, 4, 5, 6 of these a day, right? Because it's in every market. You're just going to see this over and over again. And so now we're heading back up. So you've had this. So you had this one here. What was the potential there? From this to this, there's 1700, and you had this one. Let's assume you're not going to get tick to tick. Oh, there's 1400 on a 1-minute NQ. Now, again, this is unusually high volatility, but there's some pretty nice examples as we head now back up into the premium zone. Right now, the day we end up with new highs. So you're seeing the switch back and forth. So it's exactly as I described it here. What do? They take it up, then they take it down so they can buy it lower, then they take it up so they can sell it higher, then they take it down so they can buy it lower. Back and forth, right? It's the same thing you would do if you could. Right? It's not illegal. It's just you need to understand the game you're playing and the nature of the players. They do this every day because they can. So all we want to do is try and tuck in behind them, right? Whenever we can, wherever we can. All right, here's a good way to spot what they're doing. Okay, guys, let me wrap there, and if I can get another one here, they're all over the place, right? We can look. I'm trying to spread out so it's not just stock indexes, not the ES. So I'll try and get some other markets as well. So I'll keep these coming, but hopefully you're starting to get a sense of how this works. And once again, the idea is not to replace what you're doing, right? To augment what you're doing. Okay, I'll be back later on the next one. I don't know if that's today or tomorrow, but we'll keep them coming.